It then traded sideways near the 52-week high before making a bottom. The base breakout near high came and the stock moved up by more than 70%. Welcome back to our channel. In today's video, we will see Mark Minervini's 8 essential rules for identifying stocks in a stage 2 uptrend and explore how these rules can help us in our trading strategies. Stay until the end of the video to understand how to find these stocks using a charting screener and a TradingView indicator. So without wasting a minute, let's get started. According to Mark Minervini in his book, Trade Like a Stock Market Wizard, specifically chapter 5, Trading with the Trend, he says, my goal is not to buy at the lowest or cheapest price, but at the right price just as the stock is ready to move significantly higher. Trying to pick a bottom is unnecessary and a waste of time. It misses the whole point. If we want to maximize the effect of compounding, it is important to concentrate on stocks that move quickly after you buy them. So to achieve this, we should wait for a stage 2 uptrend to develop before we buy. The buying in stage 1 consolidation lacks confirmation of the trend, and we run the risk of being stuck in dead money or stagnant stocks. Stage 2 will show significant volume as the stock is in strong uptrend. To identify this transition of stocks from stage 1 to stage 2, Mark Minervini has mentioned 8 non-negotiable criteria in his book, Think and Trade Like a Champion. In section 6, how and when to buy stocks. A stock must meet all 8 criteria to be deemed in a confirmed stage 2 uptrend. The current stock price is above the 150-day and 200-day moving averages. This is the first rule. The second is 150-day moving average is above the 200-day moving average. So Mark Minervini wants to see that the 150-day moving average is positioned above the 200-day moving average, reinforcing the uptrend. The 200-day moving average has been trending up for at least 1 month, preferably 4 to 5 months or longer. So this rule 3 emphasizes the importance of sustained positive movement. Minervini looks for the 50-day moving average to be positioned above both the 150-day and 200-day moving averages. This suggests increasing momentum and a strengthening trend. The next rule is the current stock price is at least 25% above its 52-week low. Mark Minervini wants to see that the stock has risen at least 25% from its lowest point in the past year. This shows resilience and upward trend confirmation. The current stock price is within at least 25% of its 52-week high. Additionally, Mark Minervini looks for stocks whose prices are within 25% of their highest point in the past year. This shows strength and potential upward momentum. The 7th rule is the current price is trading above the 50-day moving average as the stock is coming out of a base. Minervini requires the stock's price is above this average, indicating recent positive movement. These are the 7 criteria. But wait, I mentioned 8 criteria, right? The 8th criteria applies only to US stocks, as the IBD rating isn't available for Indian stocks. All these rules are okay, but you must be thinking about how to make use of them for your trading. Don't worry, I'll tell you that too. If you have understood these rules, you will realize that these rules will give us stocks that are in an uptrend. We know that when the market is in a bull run, every Tom, Dick and Harry stock goes up, but the same is not the case when the market corrects. Very few stocks move up and hold their ground. So these rules effectively filter out kachra stocks and give us strong stocks when the market is under correction. The charting screener will give us stocks that are standing tall against the market pressure. So this is the charting screener I was talking about. Here you will find the stocks that fulfill all the rules as mentioned earlier. We know that the market bottomed out in March 2023, but there was another dip in October, and I have chosen a few stocks that fulfill the above rules even when the market fell in October. All the rules I have incorporated in this particular screener in terms of filters. Here you can see the daily close should be greater than its 150-day moving average, 200-day moving average, and 150-day moving average should be greater than 200-day moving average. So all these filters I have incorporated in this particular screener. And the link is in the description. We will now see some examples. The first is Tata Motors. The stock made a 52-week low on 28th March and saw a good surge of around 80%. It then traded sideways near the 52-week high before making a bottom on 26 October. The base breakout near high came in mid-November and the stock moved up by more than 70%. This is the TradingView indicator I was talking about. Here you'll be able to see if the stock is trading above its moving averages or if it's near its 52-week high or low. And the last line will tell us the overall picture. You will find this indicator in my profile under the scripts section. And don't forget to follow me on TradingView. Another example is IFCI. The 52-week low was on 28 March 2023, and the stock saw a strong bounce. Before the correction in September and October, the stock witnessed more than 100% up move. So it is more than 25% above its 52-week low, and also trading within 25% of its 52-week high. When the market was under pressure, the stock was still fulfilling all the criteria of Mark Minervini, and that's how we pick a strong stock in a dicey market. The stock bottomed out on 26 October and traded sideways before breaking out of a small consolidation. It quickly gave 32% and formed a base over a few weeks. The base breakout took the stock 190% higher. I hope you are able to understand how we can use the Mark Minervini's trend template. If you find the content interesting, share it with your friends and family and make them aware of these things before they make their next big loss. And remember, mastering these rules takes practice, so keep learning and refining your skills. That's it for today. Thanks for watching and see you in the next video.